Uh, Good afternoon, everybody. How's everybody doing today? Hope everybody's having a good day. What's happening, Dakota? Well, got kind of a interesting, I guess, couple of weeks here. I guess the big thing is tariff fights. So, um, when the markets got a little bit rattled off of, they knew Trump was going to be putting tariffs on and everything like that, but finally when he did, of course, the markets, overreacted to that, kind of sold off a little bit. Since then, he's kind of pulled back a month, just because the other countries have said, "Oh, please, we'll do this and this and this and this and this." So I guess that's his little bargaining chip that he's using right now is just all those tariffs. But China wasn't too impressed, so he put a 10% tariff on them, and looks like they just flipped around and put a 15% tariff on us, and also started investigating Nvidia and Google and everybody like that, just because that's what they do. So, anyway, we'll just kind of see how this all plays out over time and kind of see what it does. But I think the markets have finally gotten a little bit used to it. We're still holding above last month's open right now, above this month's open, which is last month is the year open, right? So everything's doing pretty well. One piece of news though that I thought was, um, I guess, sad in a way, and of course, almost expected. Waffle House came out and said they're putting a 50-cent charge per egg. It's a surcharge per egg, just because of the price of eggs. Um, and they have really have gone up. They've gone up about 40% over the past couple of years. And I think most people heard the news they had a bird flu and they had to kill off a bunch of chickens and everything like that. Um, and so it's going to take a little while to get the chickens back up and running. And so there it is. But anyway, um, we'll just kind of see how that turns about and kind of goes from there. Um, Another thing, if you haven't seen the price of beef lately, we're at basically 1951 lows on the herd of beef. So, but anyway, hold on one second here. Let me close my door real quick. People walking in on phones. But yeah, they've actually the herds have been decreasing on the cattle side of things, just because of the droughts and everything like that that we've had over the past several years. We actually had to kind of started a pickup in it, and then over the past, I guess, year or two, we've had some really bad, I guess, grazing lands and stuff like that. So actually decreased the herds a little bit. So we've got the price of beef a lot higher, and and it takes a long time to rebuild a herd of beef. I mean, even though the gestation period is about the same as a human, it takes about 3 years to start building a herd back up and, weaning the calf off and everything like that, and then new calves and all this good stuff. So, but yeah, it's um going to be probably high beef prices for a good little while, and it might be, a couple of years before we start seeing herds start picking back up, and we'll just have to kind of see how that pans out. Another thing we've got going on this week, there's really jobs reports. The JOLTS came out, and this is kind of backwards if you think about it a little bit. Last month, when the JOLTS report came out, and that's the job openings report, it comes out the same week as the non-farm payrolls, which is on Friday. On Tuesday, they'll do JOLTS. On Wednesday, they'll get the ADP, which is the private sector payrolls. And then, of course, we'll get the big report on Friday. The last month, we had a decrease of about 400,000 jobs. So we were, well, I say a decrease. We had a big jump up of 4,000 jobs, more than expected. I'll put it that way. And of course, the market tanked off. I don't know if you remember what happened back on January 7th, but the market fell pretty hard based off that JOLTS report. This time, we had a decrease or a draw below expectation of about 400,000 jobs. So it's the same amount. And now the market's trying to push up a little bit on that. So it's like good news is bad news and bad news is good news, which I can understand that looking at the market. They don't like interest rates very high. They want the economy to kind of slow down, get interest rates back down. And I mean, interest rates are pretty high right now. And so it's kind of biting a lot of people. I heard a really interesting statistic. Um, and I mean, it's really just over in the past 15 years here. What was it? They were saying in 2012, the average house to be bought, you needed to have a salary of about 40 grand. Now, that same house for just a average house in the United States, the average salary has to be 126 grand. So, and people don't make that, not everybody. So it's really, really hard for people to try to buy a house. That's just because the price of houses are so high, which brings property tax up, which now property taxes are high, which also brings insurance up. So everything is just real expensive right now. And until that gets reconciled, and I don't know how the administration is going to do it, who knows? You need to either build more houses or, make more houses available or something like that. And see if the housing market will start coming back down. Need to have more chickens, need to have more bees. So, supply demand here. Supply is dwindling and demand's still there. So, and that's really kind of what you're seeing. And going into the energy markets themselves, Trump's on the drill baby drill side. Saudi Arabia and the frackers here don't want to increase production at all. They like oil to where it is. Then he flips around and put more sanctions on Iran, and of course they've already got sanctions on Russia and all this stuff. So they've decreased the oil supply, but they want us to pump more oil. They don't want to pump more oil, and here we go again, right? So it's kind of a catch-22 with everything right now. I mean, anything that just kind of seemed to be normal, 10 years ago is not normal these days. And that's what kind of the markets are moving around on. And the one consistent, thing that's out there that, I always rely on is gold. I mean, trade gold and silver and copper and you'd be just fine. They have a tendency to going up and pulling back, and you buy it and it goes back up and they pull back a little bit and they actually almost act normal. So, and I think that's the biggest thing. One thing, the areas that I like, I mean, are the metals markets, and the energy markets as well. So, and I think we're going to be seeing a lot of market volatility, at least over the next couple, 3 months, just because of, everything that is going on. And it's not anything to, get worried about or, get shocked and awed and all that good stuff. It's just how the markets are going to react to what's going on until all that kind of smooths out a little bit and they get a better feel for what the future is going to be like, which is really hard to, pull out a crystal ball and say, hey, this is what the market's going to do. I think there's still going to be some volatility, and you have to think, I mean, we're still up pretty well. I mean, we're only what 100 points or so from the all-time high in the S&P. It's not that far away. So even though the markets have pulled back some based off the tariffs and everything like that, they've kind of bounced back up here a little bit. We're not all that far from the all-time high in the S&P. So everybody's 401ks and stuff like that are still doing all right. Now, I think there's been kind of a sector rotation, though. You've seen more of the, I'll say the Dow Industrial, the blue chip guys. There's been more buying in those areas and less buying in the tech sector areas. And that might be just because of that deep, whatever, sleep or whatever the thing was, deep seek, I guess it is, coming out with that AI stuff. And I think AI is going to be, everybody's still working on their own AIs all over the place. It doesn't matter what website you go on to. They say, hey, check out our AI. And just like, why, and that's the thing. I think that's going to be driving a lot of things going forward. We'll just have to kind of watch and see what that does affect and what it doesn't affect and all that stuff. So, but right now, we're in our first week, I guess, of February. We finished out the first month, and then you got a little barometer, the up January, up year. And I'm not real big into rules of thumb. I don't like those in the market myself, but they are there. People still watch them. It's just like the Dow theory. I mean, the dogs of the Dow, you have the Dow theory of transportation's up and the Dow's up and blah, 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 and it's going to be continue to move higher. Dogs of the Dow, you take the worst ones from the last year, and those are usually outperformed this year. Um, Up first 5 days of January, it means an up January, which means an up year, blah, 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 and all that stuff. That's not necessarily true. And if you look at the Stock Traders Almanac, and look at it, going back to 1950, it's 73% true. So it's not that bad. Um, but I'd rather just kind of take it, a little bit at a time here and let the new administration do what they do. They're still confirming, I don't know how many secretary people that are still out there, but they're still doing all that stuff. I'm not real big into politics, never have been. And all I know is, what the house costs and all the stuff that we do at the house, and get to figuring out, well, who's doing better than who else was. So, but that's the thing. I think really going forward, I think gold's going to continue to move up. It's becoming the safe haven now. It's been pecking at brand new highs and stuff like that. Now we're on the April contract now in gold, as opposed to the February contract that's been rolled over. If you were long gold, you got to sign gold, whatever. But anyway, but right now, I mean, that thing's sitting at 2875 right now. We're not too far from 2900 as opposed to 2800. And it's going to probably continue to kind of inch on up. Even silver's back above $33. Copper's back above 430. So I think the metals are going to continue to do well. And looking at metals, if you will, if you're kind of looking around at the nuclear talks and stuff like that, I think we're going to be starting to see that we had a nice rally in the uranium stocks. Right now they're correcting back. Nothing ever goes straight up, and I think we're probably going to get a new surge in those, and continue to kind of move up in that area as well. So I think the metals area are probably, in uranium and nuclear and stuff like that, are probably going to be your better stocks right now. Over the, well, I'll say over the next year and a half. We'll have to see if that develops out, is the big thing. And so I'm just going to sit back and kind of being just a little bit patient and kind of see what goes on. So, but I think there's a lot of corrections in some areas and some big rallies in other areas that we've kind of been seeing and stuff like that. Bitcoin, if you follow that, is doing its best to stay above 100,000 right now. It had a huge correction back. It was up to 110,000 almost, went back to 90,000. Now it's back up to 100,000 again. I think it just went up to like 103 or 104 or something like that, and have a little correction in here as well. But that's kind of a volatile market, as we've already known that. But the one thing that I don't get with it is it's air, it's electronic. There's nothing behind it. And when you look at gold and silver, it's actually been around for hundreds of thousands of years, right? So there it is. So we'll we'll just kind of keep those, in the forefront of our brains, and kind of stay on the asset side of things, in my opinion, and continue to see if those things will turn out to do the best it can. But I think overall the markets are holding up well, even though, and that's a big thing. Always kind of step back. And one thing that I do, and I actually have a little page on here. I'll just show it to you real quickly. This is in our roadmap software. If you haven't seen it, that's fine. But this is what we call a thirds page. I had this put in here a long time ago. And basically all it does, it doesn't tell you to buy anything or sell anything or anything like that. Basically, it just looks at a forest instead of just some, a plant here and there and a tree here and there. And that's one thing that I like to do. The top little box up in here looks at basically the previous day. All right. And then you can go back. Actually, both of them say 30 days back. So they're going to be the same thing almost. Yeah, they are 30 days. I thought I had changed that. But the top section here is just the previous day. The bottom section here is over the last 30 days. So what it does, it just basically takes the high and the low and it divides it in thirds. You have the lower third, the middle third, and the upper third. And so if you look at this, to get to the lower third, we're going to have to get down to 29.26, I mean 59.26 on the S&P. Well, the year open was 59.49. So if we get down there, yeah, we're going to be negative on the year, and there we go, right? Um, but right now we're trading in this upper third. There it is. So as long as we stay in the upper third, that means that things are more positive. And that's why I like this page. And there's a bunch of stocks down here at the bottom, of course. But here's a whole bunch of futures and commodities at the top. You can kind of step back and go, okay, we just dumped off 100 points in the S&P is basically what they did. And then I can just come in here and kind of compare things and go, okay, we're kind of neutral now, or we're still on the positive side of things. And that's why I keep this page on here, just to kind of let me see how bad's the market really. And looking at 30 days in the market, basically you have 20 trading days in a month. I just kind of give it a little more than a month and just say, okay, whatever. But it's done a real good job just kind of looking at things going, wow, that thing really got hit hard. And then you come back in here and look at it and go, oh, well, they just went down and tested the lower end of the upper third range. So no big deal there. And that's one thing I kind of would encourage you to do if you don't get to watch the markets all the time. And you can catch a lot of updates and stuff like that if you, let me see where that is. I don't know if I have this here anymore. Here we go. You can go here. There we go. If you haven't gone there, and I give a lot of updates and things like that of the market and just let you know how things are going, what I'm looking at for that day. We put out all kinds of stuff out there. And of course, we do this a couple of times a week. We're here on Tuesday. We'll be back on Thursday, which is going to be right before the jobs report, but we'll have the ADP coming out. And so that's the one thing that, I watch the markets all day, every day, but not everybody can do that. But if you can't do that, I mean, the big thing is just go to, I don't know, investing.com or barchart.com or something like that and find out where the Dow opened the year and the S&P opened the year and the NASDAQ opened the year. Write them on a stick 'em note and stick it on the side of your refrigerator. That way you can just kind of go by when you hear that the market was up 400 points today. You go, okay, well, yeah, we're still up and everything like that. Or if the Dow was down, 300 points or whatever it is, you can kind of keep track of where we started the year at. And even if you're in July, it's still relevant. I mean, you still want to, because if the S&P and the Dow and the NASDAQ are up on the year, all your retirement funds ought to be up. And if they're not, you need to find some stuff. Stuff is going up. But that's the biggest thing, is just kind of keeping track of that. And that's what I do all the time. I always keep track of, hey, where's everything opened up? That's the beginning of the race. A lot of people think about closes, but that's the end of the race. And I can't do anything about a close, but I can do something at an open, because it can go up or down or whatever from there, and I can trade it based off of that. But I don't think anybody buys a ticket to a football game to get there in the last 10 seconds and go, okay, game's over. I already know who won now. And that's the thing. And whenever we're looking at a market, we're what they call the hard right edge or whatever it is we're trying to figure out if this thing's going to continue to move higher, if it's going to correct back down or anything like that. And so I always kind of keep track of, okay, here's my line in the sand for the year. And if you want to, when you get a month open, write those numbers down too. If those month opens are still above the year open, you're still doing good, right? And that's the thing, you can kind of keep track of that. And doesn't take, 5 minutes to get that information and stick it on the side of the fridge and just go by and look at it every now and then. and go, okay, we're still looking good. And that's all you got to do, right? So, and that's the easiest way to kind of keep track of what's going on. You're going to hear a lot of news. There's going to be tons of news. In fact, there's so much news right now that nobody can keep up with it. Everything's just kind of pouring out right now, and everybody's kind of scrambling around to see, how's this going to affect this and how's that going to affect that. And you got, I mean, two rules or two different camps of tariffs are going to, hurt the economy, make inflation bad, blah, 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 blah. And the other camp is this is just a tool to get everybody on the same page of what, the United States is going to be doing, either, help us out and play in our game, or we'll just punish you for it, basically is what they're doing. And that's just a tool to do that with. So it all depends on which camp you're in. Most of the economists are on the side of inflation, which we already have inflation, right? The other camp is it's only going to be kind of temporary, and I think that's what really pounded the market at on Monday. Even though it started recovering a little bit on Monday, but I mean the S&P literally gapped down here. But there, I'm going to this one, kind of show you here. So this is the close on Friday, and this is where we started out on Sunday night. This is the S&P futures. Notice they came right back and they filled that gap, and now they've been kind of pulling back a little bit. So, but anyway, but from Friday, they hammered it, and now we're up on the week, and we're still up on the year. But until we can close back above where we were last Friday, we're still down from last week, right? So you can argue, hey, we're up on the week, or we're down from last week. And that's what you're hearing here in the marketplace a lot of times. You'll hear them saying, hey, the market was down today because of this or this or this. And you look at it and go, well, it was up from the open this morning. So they're saying it's down from yesterday, but I'm saying it's up from today. Well, if I bought something today, I made money. If I shorted it from the previous day, I might have made money. So, and that's the thing that people argue about, which is the real one to look at, open or close. And so, and that's what I always kind of look at is not only what's happening today and what's happening this week, but how do we compare to the beginning of the month or last month or the past couple of weeks. I mean, I like to look at a 10-day high and low and a 5-day high and low, just to kind of see where we're trading based inside of that. And it's a kind of an interesting picture when you start looking at, how's the market really doing? Well, I mean, looking at this picture, not all that great, but I mean, if you kind of look at this one, this is the S&P, it's just kind of all over the place right now, which we've seen that. I mean, we've gone up and made new highs, we pull way back, we come back up and we go up, come up and challenge the high and so on and so forth. And it's just kind of all over the place. But if you look at that high, I mean, literally 61.78 to 60.64, what is that, 114 points in the S&P? That's nothing. I mean, and you're looking at an average range of about 85 points in the day on the S&P. So in 2 days, we could make an all-time highs again. So, and that's why I always kind of step back and look at the forest instead of the trees, just to say we're a whole lot closer to the highs than we are at the lows, right? So, but anyway, just be a little bit patient as the market kind of tries to figure things out a little bit and kind of go from there. Oh, okay. Yeah, if you'll send an email to support@prosperitypub.com and tell them that, they'll get you hooked up. I'm in Telegram. I post stuff in Telegram every morning on the starting gate. And it should be being posted up there inside of the portal as well. The past 2 days we haven't had a trade, so you hadn't missed anything. And we had real wide range the past 2 mornings, but not only that, this morning we had that JOLTS number coming out, and based off what it did last month, I was kind of worried, man, if it comes in smoking hot again, they're going to hammer this market. And if the NASDAQ at the time was looking long. It stayed long. I mean, if you took it, it was kind of high risk trade doing it. If you took it, it worked. So, but I don't like to get people in high risk trades. So, rather just things just be the way they're supposed to be. So, anyway, all righty. Well, wow, almost 30 minutes here. So, but we'll be back on Thursday and see how the next 2 days go. Who's getting confirmed and who starts doing what where and all that stuff, and seeing what other newses are going to be coming out as far as affecting the market, and kind of see what goes from there. But I still think that the market's going to be stronger rather than weaker overall. But I think it's going to be kind of a rocky road over the next month or two as they try to figure out how everything is going to work out. And I think we just have to be cautious and be prepared for that just a little bit. So just be worried about that and kind of be a little bit cautious getting in the markets. Day trading is one thing, swing trading maybe, but trying to do something on a longer term basis might end up hurting you a little bit, just depending on how they do things. So just keep that in mind. So, but with that, good seeing you all again. Glad you all showed up. I'm glad to see everybody piling in, and we will see you again Thursday. I believe we do that at noon on Thursday, um, noon Eastern time. So we'll be back noon Eastern time doing the same little thing here and seeing what the markets have done from there. Gold's popping highs. My guess is going to continue to do that, but we'll have the ADP coming out tomorrow. See what those numbers are like, and then see what jobless claims is on Thursday morning, and then we'll be getting together. So also get to see what the EIA petroleum status report's like tomorrow as well. So, and right now we've been having some draws in both gasoline and crude oil, which is kind of to be expected just because of the big nasty snowstorm we had a couple weeks ago. Um, and I actually had ordered literally, I had a really old, winter coat that I've had for I don't know how many years. I can almost probably say decades. And the zippers were all falling off and everything. My wife goes, you ought to probably get a new coat. So I did. I bought one. I bought it like 2 weeks ago. And it was supposed to be delivered last week on Wednesday, Thursday, Friday, on Saturday. And finally, they said, screw it. It's coming through UPS. Finally, UPS just said, the heck with this. And they just put this big old note on when I put in that tracking number. They said, due to winter weather, not only in your area, but other areas, it's been hard for us to get this thing somewhere. And we'll eventually get it to you. And I was just like, oh, okay, thanks for letting me know that. I appreciate that. So anyway, there it is. And I finally got it yesterday afternoon. So, but which is nice. I finally got that thing, but it's not cold here now, so I don't need it. So, but anyway. But I'm glad it arrived, and it looked like people used it as a seat cushion somewhere, maybe to keep their butt warm or something like that in those trucks. It was all smashed and everything. I'm glad it was just a jacket or a coat. But anyway, alrighty. Well, you all have a good one. We'll see you back on Thursday at 12 p.m. Eastern time, or it's 11 Eastern. DA says 11. My fault. I apologize. 11 Eastern, and we will get going again and go from there. So you all have a good one, and we'll see you then.